Today, I'm going to tell you how you can design the perfect investment offer, period. And yes, there's a framework for that. And I call it the trust framework, right? So of course, you are about to raise capital, right? And that by itself is already amazing. You're excited because you know that if you get that cash into your bank account, you know for sure, that your business is going to grow. But one of the reasons why investors are going to give you a very quickly no instead of that hell yes is that founders are actually just too busy with what they want, what you want, right? And not concerned with what the investor actually wants. So a quote to keep in mind very easily is, to get invested, you first need to invest in the investor. Right? So to get invested, you need to invest first in the investor. So in other words, when you focus on what the investor really wants, right, you will be way more likely to connect with him on a very deep level. And hence today, I would like to deliver to you the trust framework. Now, where does trust framework stands for? The T stands for timing. The R stands for return. The U stands for you exit. I mean, everybody wants to exit. The S stands for security, and the T stands for terms. So let's dive in. For the first one, the T of timing. Your investor's first priority is truly timing. So give investors a reason why you believe now is the exact right time to invest and not in a month from now. So as we're all influenced by urgency, you want to include urgency in your deal. If there's no urgency, why should I move? So a few questions that you can ask yourself is, if you're working on configuring your perfect investment offer, how can I incentivize an investor to say yes now? Right? So what tools can you incorporate that makes the investor want to jump in right now? So maybe a special deal. The second one is, why would now be the best moment to invest and not in 3, 4, 5 months from now? Logically, of course, your valuation can go up, but maybe there are some trends going on in your industry, some brilliant contract that you have, something, right, that moves the needle forward right now. So that's for the T. Let's go to the R in the trust framework, right? And the R, of course, stands for return. Now, logically, the main priority, actually, number one, I would almost say, is why your investor is investing in the first place is, yes, he loves you and he's super excited about your business, but they want a return. They're in the game to make money. Never forget that. They frankly saying don't really care about your product. They love your product though if it actually drives them a return. The key is for an investor, return. So question that you can ask yourself is your ROI, your return on investment, clearly mentioned in your offer, right? What is the return and how do I get it? And how much return you can actually offer. Explain a worst case scenario, a base case scenario, and a best case scenario. And I can give you one tip right now. Always make sure, right, because we are all very excited, let your investor fall completely in love with the worst case scenario, because then there's only one road up. So we had the T, we had the R, yes, and now we're going to the U, which means you exit, right? And of course, the exit is the investor's third priority. It's very nice to have an investment, but the cool thing on the stock market is if you're done with the investment, you just sell your shares and you have money in your account. But how are you going to arrange that? How are you going to make sure that the investment that is made is actually driving a dividend? Or when is the moment you're going to exit? How are you going to exit? To what kind of companies are you going to exit? How are you going to offer the investor an additional incentive to create the exit early on if he needs to have an early liquidity event? Because every investor, I can tell you, if they have the opportunity to step out and you facilitated that for them, perfect, right? So that's for the number you exit, the exit. The fourth is the dollar sign, the S of security, right? And in security, in this case, we're meaning two different parts. The security that you're offering, and the security is because the investor provides capital, and in exchange for capital they get a security, and the security could be stock, right? A security could be, in this case, a interest-based loan, anything that holds value, right? So in this case, like Warren Buffett always says, is that rule number one is never ever lose money. So you need to have the security, which gives you security. But how are you going to offer additional security? How can you de-risk the opportunity where the investor feels like, okay, this is not a home run, but I have my ways out, right? So that in terms of security. Then the last one, and then we coming to the trust framework, is actually the terms. And I would say this is definitely your investor's fifth priority, right? Because investing is actually a game of speculation, right? And they are speculating that their security, that their stock is going to rise in price. And the investor is relying on the team and the product and the circumstances and the market dynamics to actually achieve that. Now, and like any game, there are rules of investment, right? And these are the terms that you are saying, like, okay, if you enter this investment, we're going to give you a liquidation preference. You have the opportunity to buy in extra shares if you take at least a minimum of take a little minimum of $500,000, etc., etc. So think about that. So if you combine all of these things, from timing, return, you exit, security, and terms, and you put that nicely in the mix, that's how you create your ultimate investment offer that is checking all of the boxes. If you want to have help with this, DM me and we will get to work together. Have a great day. See you soon.